Dividends are the new interest rates. Caledonia is paying 4% per annum. Mark, you are very successful mining in Zimbabwe, of course, and we want to give our viewers here an update about your terrific company. What's up with Zimbabwe? What's going on?
Well, I mean, as we know, there's an increasing degree of political turbulence at the moment as the president gets older, and there's a good deal of internal speculation about succession and what happens there. But I think the critical thing for us is that whatever may or may not be happening in the political environment is not affecting us at all in terms of our operations. Our operations are going better than ever in terms of rising production, falling costs, and we're having no difficulty at all getting the consumables we need into the country, paying for those, and getting our money out by way of dividends, management fees, and loan repayments. So, I mean, we've always said that what happens on the political level is what's happened politically, but commercially it really doesn't affect us at all.
Fantastic. As we see here, those are like 85% doré bars, right?
Yeah, we produce at the mine. We produce about 150, 160 ounces a day, so that's about 5 kilos a day. And we smelt them down into these gold doré bars, about 85% gold content. The rest is iron, various base metals. So it's worth pointing, even though it's 85% gold, if you were to walk off with one of those bars, A, it's very heavy, but B, I think you'd struggle to find someone who could treat it for you.
So it's a good security reason, right?
Effectively, it's not pure. By no means is it pure gold. Yeah, but it's still got the value in there.
Okay, so let's talk about your terrific mine, the Blanket Mine, and you have implemented a revised investment plan. Terrific word. We see here central shaft, number 4 shaft, number 6 winds. So what's going on there?
What you see here is at the moment, well, actually not at the moment, until 6 months ago, the bottom level of operation of the mine was 750 metres below surface, and that was it. We got no infrastructure to go below 750 metres. So what we've done now is we've successfully finished what we call the number 6 winds. That's the little thing on the right hand side in yellow, and that's given us early access to some quite high grade material below 750 metres. In addition to the revised plan, we've also put in a decline, which is just a ramped development at about 9 degrees. That goes down from 750 metres, that goes into a different ore body. So both of those are now giving us current access below 750 metres. So I think in Q2 of the 120,000 tonnes of material that we processed, increase about 10% of that, just coming up to 10% of that's coming from below 750. And over the course of the next few years, we'll increasingly see more coming from below 750 and less from above 750, which is good news because the stuff deeper's got typically a higher grade. But the big thing we're doing is this central shaft, that red thing, which goes from surface down to just below a kilometre. We're well advanced on that. And that will fundamentally change the way this mine operates. It is much more efficient, much quicker, and as you can see, it's towards the middle of the mining operation. And so it means that our workers who will go down this central shaft, the central shaft will handle material and workers. They will be dropped or lowered into the main working area of the mine. So it will increase their personal efficiency. So all of this is good stuff. It's very good stuff.
Fantastic. How many ounces you want to produce this year, and how many next year?
This year we're looking, well, last year we did 42,800. This year we said we'll do 50, and we're absolutely on target for that, perhaps even slightly ahead. And it phases, so it gets bigger each quarter. So Q1, I think we did about 10,500 ounces. Q2, we did about 12.5. We said we'd do about 13 for Q3. It's probably going to be close to 13.5. Q4, about 14. And so as you increase the production, clearly you're producing more gold, selling more gold, but critically the costs come down. Actually, you see that here on this graph here. Because about 65 to 70% of the costs are fixed, as you increase production, those fixed costs spread over more ounces, and you don't need to be a mathematician to work out the costs come down. And we already saw that in Q2. You'll see it again in Q3 and Q4. And we can see it happening in front of you. Every month we get the management accounts, and we can see these costs come down. So you get the benefit of more ounces, higher gold price, and a lower cost, and that's the central shaft. So that's gone from nothing. 18 months ago, that was just.
It was all dirt, right?
It wasn't even dirt. Yeah. It was just barren bush. Yeah. And from that, we've gone to this thing here, which is a phenomenal investment, and actually, and a testament to the to the skills not only of our head office engineering team, but also the guys on the ground. This has all been put together by indigenous Zimbabweans. We don't employ sort of Australians who fly in for 2 weeks at huge expense and go off again. This is all done locally. Fantastic testing.
That's really fantastic work. I think also another really important point is that you are paying one of the highest dividends in the sector, right?
Yes, yeah.
You're now at 4% around,
yeah,
right?
the dividend has probably come down a bit since then because our share price has run, because certainly the market's now beginning to recognise that we're delivering the things we said we're going to do. And so the market, I think, now is beginning to see through the political stuff that we spoke about earlier on. They can see that we're actually going to get through this choppy water, and hopefully on the other side of it it'll be much calmer. But they can see that we're delivering higher production, lower costs, improved cash flow, and then that gives us the flexibility to consider additional investment opportunities, both on our own ground, perhaps on acquisitions, and also have the flexibility to increase the dividend over time. We've already increased it once this year. We increased it from 1 1/8 cents to 1 3/8 cents. So it's quite a significant jump up in the dividend. And also don't forget that earlier on this year we re-domiciled out of Canada. And so that means for non-Canadian shareholders, instead of suffering Canadian withholding tax, you now get 100% of the dividend. So for me, I hold my shares through the UK. I've had a double benefit of the relief of the withholding tax plus the increased dividend.
Fantastic. That's Edison Research. They did that's the latest research from April. And if we look at the earnings per share, I mean, that's really significant growth, isn't it?
It is, but I mean, their gold price, $12.24 for the year, I think now looks conservative. It's probably going to be higher than that. Production, 50,000 ounces. We're absolutely on track to deliver that. On-mine costs, we're already lower than $652 an ounce. We announced that in Q2. Earnings per share, 23.5 cents, up from 8 last year. And quarter on quarter, the quarterly earnings will increase. So I think in Q2 we did about 6 cents. Q3 will be higher, Q4 will be higher. So 23 cents for this year and close to 50 cents for next year. So our share price is currently $1.50, thereabouts. So we're on a forward PE of 3, which still makes us incredibly cheap. So people mustn't think that just because the share price has tripled this year from less than 50 cents to $1.50, that's not the end of the game. We're just at the beginning. So as people get more comfortable that we're doing what we say we're going to do, we think there's still plenty of upside in the share.
And you have no debt, right?
No debt, although we are actually in the process of putting some proper debt into Zimbabwe, about $3 million. Very, very, very small, but just to give us the flexibility to use it properly. And actually, given the fact the cash flow has been generated in Zimbabwe, a little bit of debt, it's like red wine. A glass or two a day is good for you. Yeah. Much more than that might be a bit naughty for you. So we're allowing Blanket Mine to have half a glass of red wine a day.
I like that. Great, Mark. Thank you very much. And we can say that probably this dividend will rise soon,
I'd like to think so.
Again.
Yeah, we don't give dividend forecasts, but we've got the cash, we have the choice. Yeah.
Super. I like that. Mark, thank you very much for the update. And look forward for the rising dividend. And I would say just execute the plan. You are fine.
Thank you very much.
Thank you. Ladies and gentlemen, that was Mark Learmonth, the CFO of Caledonia Mining. Successful mining out of Zimbabwe, gold mining. The company is paying already nearly 4% dividend per annum. This should rise with the investment plan going on, what they are doing. 50,000 ounces for this year, over 60,000 ounces is planned for next year. They want to go up to 80 to 85,000 within the next 3 to 4 years. Check it out. Thanks for watching us. I'm your host, Jochen Steigl from Commodity TV in partnership with Dukascopy TV. Bye-bye from Geneva.